Hi traders, this is the video on the euro dollar and pound dollar. My name is Chris from Ready Currency, and finally we have a new update again. Last week I wasn't able to give you my view on these two currencies because I was traveling, but now we're back, and hopefully next week as well with at least an update once a week. So let's start with the euro dollar. We got a couple of lower lows, at least one, two, three of them so far in quite a shallow channel moving lower. That said, those three lower lows kind of qualified or met the goal what we had in mind, which was basically a downtrend and at least one or two lower lows, and we had three of them. So I think that that particular forecast outlook was correct, and price is basically correcting, going sideways in a way with a slight angle to the downside around that WIS 8 level here around 118, and I suspect that price will still make one more lower low, in fact, and still tag the 117.50 level. If you look at the daily chart, you can see that there's still some space left to the previous bottom. So there could be still one more lower low. It is getting slower and more corrective and choppier. So it also could indicate that that downtrend might end up soon. And if there's a strong bullish bounce anytime this or next week in July or even August, that could indicate the end of that bearish swing and could indicate the start of a bullish swing and a reaction to the upside. If price does make a bullish bounce above the low, that could indicate a potential triangle pattern. This could be an A, this could be a B, this could be a C, up for D, down for E, and a break to the upside as it makes a bullish triangle. Or even a bearish triangle. In that case, it would be an A, B, C, D, E, and down. That's also possible. Okay, so we have to keep an eye on both these triangles. But for the moment, I think that the bullish triangle has more success rate because of the fact that this is a stronger impulse. The overall uptrend is also visible. So I think that that indicates a bullish breakout has more probability, has better probability. That said, if it breaks below this bottom, and if price does not respect it but breaks below it, then in that case we might not be looking at a triangle, obviously a contracting triangle, but we could be looking at an ABC pattern that might be ending around WIS 8 here at 116.33 for instance, or anywhere around here, maybe a little bit lower even, maybe at 115, and there could be a break below this bottom, could see price of course push a little bit further. Let's take a look at the weekly chart. There you see those lower lows, but it's a slow grind. And that's what happens sometimes if you have a strong momentum, then you get a wave 4, 5, wave 4, 5, wave 4, 5. You can see that on in the 4-hour chart. Basically, that's what happened here. We had a strong momentum for wave 3, a wave 4, a wave 5, a 4, 5, a 4, 5, a 4, 5 probably as we head lower. On the weekly chart, we're still looking probably at a potential wave 1, 2, 3, this being a 4 and 5. That's why I think that there could be a bounce here or anywhere around 115, 116.30 for that upside as it basically completes a wave 4, 1, 2, 3, 4. Of course, if there's a strong break below 115, then in that case we might be looking at a bearish reversal, and this bullish swing might be finished, and we might be in a bearish mode if it breaks below 115, for instance. So how do we know which one is which? This is just a rough estimate for the long term. I think that on the daily chart, I would look for candlestick patterns to emerge either at the bottom or at 116.30 or at 115. If there's strong bullish daily candlestick patterns emerging, then that could indicate the end of the downside and the start of a bullish swing. So that's one thing I would be looking for. On lower time frames, until then, there could be more downside. So either on the 4-hour chart, maybe if there's a break, for instance, below this this trend line with the candle close below it, or that could be one signal. Or if we get the 4-hour candle close and we get a bear flag on the 15-minute chart, 30-minute chart, or 1-hour chart, and a break of that bear flag, that could be another way of trading this breakout, basically a break and a pullback and continuation. So those types of patterns would fit well, I think, in this environment. So far, no strong daily candles, not strong enough for me to consider a bounce as yet, but it could happen. Maybe it doesn't make a lower low. So if there is a strong daily candle coming like this, then that would also indicate, in my view, the end of a bearish swing. All right, doesn't have to be a lower low. So if I see on lower time frames a break, pullback, continuation pattern, it could make a lower low. And then if I see daily candlestick patterns, either after the lower low or even right now, then of course that could indicate upside for the euro dollar. So in that case, if we have a strong bullish candle like this, then it will be breaking through the resistance trend line, breaking through the 21 EMA zone, pull back on lower time frames, and there should be some follow through to the upside on that. All right, pound USD, basically same spot. It had a double top, slight difference there, but otherwise also a reversal chart pattern there, and could also be a wave 4, same thing, and has also a little bit of space to the previous bottom, so could either respect the previous bottom or break a little bit below it, and then bounce. So same thing. Basically, on the lower time frame, we have a little bit of a momentum already going on, so it's one phase further, but pullback and continuation would look good for downside for another lower low. Or just like with the euro dollar, if I see strong daily candlestick pattern here at the previous bottom or close to it, anywhere around it, then that also could indicate the end of the bearish price. And we already have wave 1, 2, 3, 4, 5. So in that case, if there's a strong bullish reaction, of course, there could be the end of that wave 5. Here you can see that price respected the 38.2 fib of the wave 4. We can see that it replaced the fib on the wave 3, and it respected the 38. So it looks like a typical wave 1, 2, 3, 4, 5. The wave 5 could go to the minus 272 target at 136.02, or the previous bottom, 136.70, or a little bit above it, even 137. So if we get a pullback on the 1 hour chart, there should be some continuation left. And anytime when there's a daily, basically a daily candlestick pattern, then in that case there should be indicating the end of the bearish swing and a potential bearish bounce there. If we don't get that candle, or if it's a smaller candle, of course, or if it's a good candle but no follow through and it goes sideways, then of course it just could indicate the lack of a bullish reversal, and later on maybe a break and a full downtrend reversal. It's possible, but it's still too far from right here to, I think, assume that. But if the bullish reversal doesn't happen, then yes, downtrend continuation later on in August, I think, or maybe even end of July, is certainly on the table as well. And we'll do an update on that hopefully next week. So yeah, thanks for your patience. Hope this helps a little bit, and hope to be back next week. And we'll try to do an update in August as well, once per week, and keep you up to date with your dollar and pound dollar. Of course, if you're interested in trading with us, there are automated trading solutions so that you don't have to scan the market or enter and exit yourself. Zucier, for instance, is doing a great job, and feel free to become a member of Zucier or my SWAT method, which is more manual trading and has a course of 70 videos, with 20 hours of materials and more strategies, templates, ebook of 500 pages, and all the templates, of course, and stuff like that. So very expanded course for learning and understanding the charts better. All right, that's it. See y'all soon. Cheers.